fund administrators don't want to do valuation. They've looked again at what it is that they do, and they've decided that actually what they do is arithmetic, and not valuing anything. They take prices, from pricing sources. But when it comes to sort of making a decision about time of day or which pricing source, or if a particular stock is listed on two different markets, which market you use, then that's not their decision. That's for the manager to decide.
And what this regulation is doing is putting responsibility as a regulatory matter onto you as a manager in London. But for tax planning and all sorts of other reasons, not least investor desire for independent governance, your fund board still has responsibility as well. So you can actually see a lot of places where there could be a tension, especially if we live through 2008 again, which we will at some point, a real tension between the manager and the fund board.
What does a non-US investor generally want to do in investing in a fund? It doesn't want to be paying tax on a current basis. It wants to accumulate gain and only pay tax, if at all, as and when it actually receives a return, which generally speaking will be on a redemption.
We've had quite a few questions of people saying, how much does it cost to set up? How much the documentation cost? I won't put the guys on the spot. But in reality, you need to talk individually. These are not standard documents. It's a case of, depends on your strategy. It depends on how quickly you want to get going. Depends how much tax advice you need, because that normally seems to bump things up a little bit.
Partnerships are tax transparent for US tax purposes, which means that any income and gains from the underlying investments is treated as income and gains in the hands of the investor, and they can pay their tax. It's a reasonably good result for a US taxpayer.
With this new regulation that comes in next summer, that whole relationship between manager and fund, at least for people who are fully caught by it here in London as so-called UK AIFMs or alternative investment fund managers, that whole relationship is changing quite significantly, and the management company here in London is essentially assuming as a regulatory matter a lot more responsibility for the entire structure, for overseeing service providers, and for making decisions in relation to the fund that go beyond portfolio management than it ever had to before, at least as a legal matter.